Good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Very good morning to you, Ankita. And what's the handover that we're getting from the US markets? Obviously, we've seen a lot of companies report their numbers, whether Apple, Amazon, Alphabet. But how did the markets react yesterday?
Good morning to you, Vinny. But markets were a bit mixed because the earnings were a bit mixed. Yesterday, the S&P 500 rose to its highest level in 5 months as better than expected Meta results further improved sentiments around technology shares, which led the market lower last year. Now, the broader market index jumped 1.4%, its best level since August. Meanwhile, the tech-heavy Nasdaq Composite advanced 3.2%, its highest level since September. The gains came ahead of a trio of big tech results, as Vinny mentioned, after the bell in Apple, Amazon, and Alphabet. Now, at the same time, the Dow Jones Industrial Average underperformed, falling 39 points, was largely flat but in the red. Meta surged 23%, its best day since 2013 after reporting a fourth quarter beat on revenue and announcing a $40 billion stock buyback. Apple, however, missed the expectations for revenue, profit and sales for many of its businesses. Let's look at the European markets. European markets closed higher after interest rate hikes by the European central banks. That was in line with the street expectations. Now, the ECB raised the interest rates by 50 basis points, something that the investors were already penciling in. And the Pan-European Stock 600 index closed 1.4% higher, with sectors mostly in the positive territory. DAX was up 2.1%, CAC up 1.2%, and FTSE was up 0.7% in trade. So that's the global handover that's coming in. Vinny, tell us, what is the crude looking like?
Absolutely, and in terms of crude prices, what you see coming in, yes, we saw a slump coming in Brent crude oil prices overnight, but now, as of now, they're seeing a bit of a recovery. Now, that slump mainly was of the economic data that came in, as well as a stronger US dollar, was something that was affecting the crude prices as well. So keep an eye out on the crude oil prices. As of now, surely have opened up in the green this morning on Friday. Whether you look at the Brent crude oil prices, that's somewhere around the $82 per barrel mark, while WTI crude oil prices is somewhere around the $76 per barrel mark as well, which is an increase in both of them around by more than 0.2% in trade.
Right, Vinny. Now let's quickly take you through the important events to watch out for in the session today. We are in the thick of earnings season, we all know that. So there are a couple of earnings coming out today. We have ITC, we have Divi's Lab, SBI, we have Kansai Nerolac, M&M Financials, Imami, Tata Power, Manappuram Finance, Marico, Bank of Baroda, Paytm and Interglobe Aviation. So that's a power pack lineup, and it's going to keep us very busy through the day, Vinny.
Absolutely a power pack lineup coming in over there, but the Bank of England has raised key interest rates by 50 basis points. The central bank expects the annual inflation in UK to fall by close to 4% by December this year. And although it is still expecting a decline in output, it is said that to be much shallower than the November forecast. Similarly, the bank is seeing signs of a much shallower recession than it feared as well. The bank has maintained its hawkish stance, indicating the further hike of 25 basis points in the coming meetings. Meanwhile, the European Central Bank too continued to rate hikes, raising the refinancing rates by 50 basis points. Listen in to what the President Christine Lagarde had to say of the President of the European Central Bank.
The Governing Council will stay the course in raising interest rates significantly, at a steady pace, and in keeping them at levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target. Accordingly, we today decided to raise the 3 key ECB interest rates by 50 basis points, and we expect to raise them further. In view of the underlying inflation pressures, we intend to raise interest rates by another 50 basis points at our next monetary policy meeting in March.
Well, keeping up with the interest rate hikes, the Bank of England, as we mentioned, has raised key interest rates by 50 basis points The central bank expects the annual inflation in the UK to fall close to 4% by December this year. Now, also, the European Central Bank too continues to raise its interest rates. By refinancing rates also were raised by 50 basis points. Now, ET Now also spoke to a couple of experts on this. Listen into what they had to say.
Of course, projections and forecasts are very difficult to make. So the energy prices clearly have come down, but if you look at the headline numbers, they are still at 9% or higher level. So the bank, they are making a projection that those numbers are going to come down quicker and sooner. But again, that's in the future, 3-4 months down the line. We are very different to what's happening in the US. In US, the headline number is already close to 2%, and they are energy independent. We in UK are energy dependent. And a lot of the things that we do are based on the gas prices. I mean, one of the questions was, why is IMF giving UK such a low rating in terms of growth? And one answer which came from Bank of England is that maybe the monetary policy has transmitted far too quickly than other economy, which could be true the way this country works. So there is an uncertainty about the future outlook, which keeps the Bank of England on the hook, pretty much like the US. But in US, I believe that they are bluffing and they are not going to raise rates as much. But in Bank of England, they have a fear that given that energy prices may reassert, they want to leave that window open.
And it's all about earnings, whether here or in the global markets. And let's talk about the earnings of Apple. It was, what you saw in coming in, missed in terms of expectations for revenue, profits and sales for many of its lines of businesses, sending the stock lower in the extended trading session. Now, Apple's overall sales for the holiday quarter were about 5% lower than last year's, and this is the first year-on-year sales decline since 2019. Apple CEO Tim Cook said that their 3 factories hurt the results and a strong dollar, production issues in China affecting the iPhone 14 Pro and iPhone 14 Pro Max, and the overall macroeconomics of the environment.
And some more earnings coming in. Google's parent Alphabet missed on both top and bottom lines when it reported its fourth quarter earnings. The company's stock declined after Google's advertising clients pulled back spending from a period of pandemic-led excess. Executives of the search and advertising giant adopted a subdued tone on a call with investors, promising an extended period of belt-tightening, particularly on hiring, real estate costs and experimental projects that can take years to reach fruition.
And the big tech is on the back foot as Amazon also issued a weaker than expected guidance, overshadowing the better than expected revenue for the fourth quarter. Amazon closed out its slowest year of growth in its quarter as the public company, and revenue for the year increased by 9% as inflationary pressure and rising rates put a damper on the consumer spending. The stock price lost almost half its value in 2022.
And Starbucks reported quarter four earnings where it fell short of estimates due to weak international demand. China's COVID surge seemed to be heavily impacting international sales. Overall, the company reported a weak set of numbers against the Wall Street expectations.
Automobile manufacturer Ford reported the fourth quarter earnings. It missed the expectations and net income has fallen by 89%. This eventually led to the share to fall as much as 8% in the trading hours. Meanwhile, Ford CFO John Lawler said that this year is a pivotal year for them to reshape the company.
And Berkshire Hathaway Vice Chairman Charlie Munger urged the US government to ban cryptocurrencies as China has done, arguing that a lack of regulation leads to a gambling mentality. A cryptocurrency is not a currency, not a commodity, and not a security, the 99-year-old Munger said in an opt.
Okay, moving on, Bridgewater's Associates founder Ray Dalio no longer thinks that cash is trash. Over the past year, cash has become pretty attractive relative to both stocks and bonds, the famed hedge fund manager said during an interview. While bonds might offer investors a higher yield, swollen public sector debts in the US, Europe, and Japan negatively real yields have made securities less appealing, Dalio said. Now, that is a notable shift from last May when Dalio said that the cash was still trash, but that stocks were trashier as the 2022 market meltdown got underway. Dalio offered an update in October when he tweeted that he had changed his mind about cash and now viewed it as about neutral.
No, it's not a scam, and neither is this fake news. Hong Kong is indeed giving away free tickets. Vinny, do you want to go? 500,000 of them apparently. But what prompted this major financial hub to resort to such a move? Now, this is explained just earlier. This was explained just earlier today. Let's take a look.
Now, COVID and its related travel disruptions seem to be almost over. The pandemic recovery is the theme of the season, it would seem, especially in China and in Hong Kong, where people have been cooped up for much longer than the rest of the world. And if you were one of those high flyers looking to visit the Asian countries, then let me give you some good news. Hong Kong is planning to distribute 500,000 air tickets, and they're doing it for free in a bid to attract tourists. Who is eligible for these tickets? How can you get to see Hong Kong on a free flight ticket? That's what we're explaining today. So Hong Kong's leader, John Lee, has launched this Hello Hong Kong campaign. He's trying to boost the tourism industry in the Pearl of the Orient. The government hopes to revive the country's economy by welcoming in tourists after its global image took this huge beating because of the violent pro-democracy protests that took place in 2019 and the zero-COVID policy measures, too, that led to its borders getting restricted. So Hong Kong has been this major tourist destination for years, given that it's a global hub for air traffic. And just to put that into perspective, the country attracted 56 million tourists before the pandemic. And that number dropped to as low as 91,000 in 2021. It recovered to 605,000 tourists in 2022 when those restrictions started easing. But let's get to the part that you've all been waiting for. How exactly do you get those free tickets to Hong Kong? Well, the government has said that the tickets are going to be distributed through Cathay Pacific Airways. Its budget carrier, also Hong Kong Express, is going to offer them, and Hong Kong Airlines International Holdings. So these tickets will be on offer starting the month of March. They will be available for a period of 6 months. While the government has not announced how it plans to distribute those tickets yet, it has suggested that people may get 2-for-1 tickets, and frequent flyers may also get tickets through the lottery system. Besides these measures, Hong Kong also aims to increase the number of tourists from the mainland. The only pandemic-era restrictions in place in Hong Kong are masking mandates, and those apply in public spaces. But the government has claimed that those rules may be relaxed to make travel that much friendlier for foreign tourists. And that's the big news.
Welcome back, and you're watching Market Cafe on ET Now. Let's talk about, meanwhile, the government actually seems to have unwavered on the ongoing situation, especially when it comes to the Adani Group of stocks and their green and renewable energy vertical. In fact, the Power Minister R.K. Singh has categorically gone on to say that Adani stock plunge will not have any impact in India's renewable energy space. Let's go across and listen in.
We are blessed in the sense that now I have one of the most robust renewable energy capacities in the world. And that means that I have at least 15, 16 large companies, which are of a level of almost global companies, capable of going and investing anywhere. So, this doesn't, will not impact us in any way. We have many large companies. And all those large companies are some of the biggest companies in the renewable energy world. Some of the biggest companies.
And well, there's also buzz that foreign governments are trying to reach out to the Indian government because of this whole saga. Now, MEA spokesperson Arindam Bagchi has clarified that the foreign ministry is not aware of any such outreach by the foreign governments. Let's take a look.
Look, I don't know if they will approach me. I'm not aware of any such outreach at all. I don't think it's a foreign policy issue. If there is any query that they might have vis-a-vis a private organization, maybe they'll route it through to other concerned departments. But I'm not sure. I'm certainly not aware of it. I don't think we have been approached by any government.
And moving on the latest on the Adani saga, reports are emerging that the National Stock Exchange has put Adani Group of companies, Adani Enterprise, Adani Ports, Ambuja Cements, under additional surveillance mechanism. Now it says that the trading in these shares will require 100% margin and has even placed the FPO book manager Monarch into additional surveillance.
And it seems like there is no end to the layoffs in the startup space. Now, Byju's is cutting another 1,000 jobs after its recent layoff, where it cut 5% of its workforce. Now, my colleague Anurag Joshi is here to give us more details on this. Over to you, Anurag.
Yeah. EdTech giant Byju's has laid off another 1,000 of its staff in the latest round of job cuts. Now, the latest round of job cuts stops the layoffs announced in October, when the company said that it's going to be cutting 5% or 2,500 of its employees. Now, Byju's layoffs comes on the back of the company facing a slowdown risk, and also giving a guidance about its growth trajectory. In fact, in October, the company had given a guidance that it is targeting to become a profitable firm by March 2023.
Okay, that's the update coming in from the startup space. Welcome back, and you're watching Market Cafe on ET Now. Let's get more stock specific, more sector specific. And talking about sectors, there's a cement channel check which has come out in the month of January, which actually revealed that few regions actually across the country are seeing some price hikes coming in as well. Before we actually, pick on that cement check, actually let's go across. State Bank of India, is going to be reporting their Q3 numbers as well. So that's an important, bank that we're keeping an eye on, a large bank where NII and PAT are expected to see a jump on a year-on-year basis. Harsh is here to give us more details on that. Harsh, take it away.
Well, SBI will come out with its numbers. You're expecting net interest income at around 38,000 crore. That's a sharp sequential uptick, 24% when I'm looking at it year on year. Operating profit too will go up by around 24% year on year. Provisions will see an uptick when I'm looking at it sequentially on a quarter-on-quarter basis. But we have to keep in mind that in Q2, the provisions came in at the lower end of the stick. So we're looking at 3,000 crore of provisioning, which is a very, very low base. So we are expected to see that go up to 4,500 crore odd. We're looking at profit after tax, therefore, of 13,500 crore, pretty much flat sequentially. So definitely a solid performance overall. We're looking at a 60% growth on a year-on-year basis in terms of PAT. NPA is expected flat, no surprises at least expected there. NIMs are expected around that 3.5% mark. Keep an eye out on deposits, because as deposit rates start getting repriced, that will start impacting NIMs, and commentary around that will also be important. Gross advances are expected to go up 20%, very solid growth there, 4.5+% on a quarter-on-quarter basis. Deposits too, to match around 3.8% quarter-on-quarter, 13% year-on-year. That's where the deposit number is expected to come at. And of course, the loan growth traction is what will keep SBI in the news, hopefully. Margin guidance going forward will be an important piece of the puzzle, as I did mention, with regard to deposit rates. So keep an eye out on all of these things from SBI.
Okay, thank you so much for that, Harsh. But let's talk about the FMCG major, ITC. Now, obviously, there's a favorable base that comes into play for ITC hotels. But let's look at what you're expecting in overall terms of the numbers of the company. And do not forget that, just a couple of days back in the budget, that tax amount of the NCCD was increased by 16%, which is a very small portion. We saw yesterday that ITC stock was actually at its all-time high levels. Now, in terms of numbers, we're expecting a revenue growth of 6% coming in for the company, which is going to be at 16,810 crore rupees. Profits expected to see a growth of 11% coming in at 4,605 crore rupees. Margins, we're expecting an expansion coming in terms of margins for ITC, 34.6% versus 32.2%, so more than around a 200 basis point expansion in terms of margins for the company. Cigarette volume growth, which is a very important number that we keep an eye out on, that is expected to come in at around 8 to 9%, which is, seems like it's going to be around that pre-COVID and above the pre-COVID levels as well. Now, in terms of obviously hotel business, that's going to do well because there was tourism, international tourism is back, a wedding season was back as well. So that is going to support overall the hotels business, and strong demand is expected to be seen by the hotels for ITC. Now, moving on, we have the paper business also, which is expected to do well, given that there was a, there's going to be a favorable base effect, which is going to be coming in for the paper business as well. Now, non-cigarette FMCG business, that is also expected to see a growth of 15% coming in. EBITDA margins, yes, an expansion, given that the sales mix, improvement in a sales mix is giving a positive push to the EBITDA margins of the company. And also do not forget, because they've taken price hikes across some of its segments, favorable mix as well as better operating efficiency is something that will support the margins of the company. Other than that, factors to watch out for. Keep an eye out on the cigarette volume number that we are watching out for. What is the mix that is actually coming in? FMCG businesses EBIT margin is an important one. What is the outlook coming in on the paper business? And obviously outlook for agri and hotel business are the key factors that we're keeping an eye out on. Do not forget, yesterday ITC was an all-time high.
Well, that was the preview for ITC. The results are due as of today. Now, this is that time of the show when we get you all the stock-specific news and the stocks that you need to watch out for in today's trading session that will be buzzing. We have with us Vamakshi in the studio to give you all the brokerage notes that came in this morning. Vamakshi, tell us what are the brokerages saying?
Well, a very good morning to both of you all. Let's first start off with PB Fintech. We actually have a note that has come in from Citi. Now, they've actually opened a 30-day positive catalyst watch on the stock, and they believe that the reaction to the budget announcements that we saw on that specific day was quite overdone. They believe that the share could rebound in the near term as the earnings could surprise positively. Now, the contribution of ULIP in overall premium mix for the company is quite low at around 20 to 25%, and they believe that the convergence of management guidance of EBITDA break-even is also seeming quite likely. So on the back of those positive factors, Citi has actually gone ahead, maintained its buy rating on PB Fintech, given a target price of 760 per share. The next stock on our radar is SBI Life. We have a note coming in from Citi. They've opened a 90-day positive catalyst watch on this counter, and they believe that the reaction to the budget announcements for this as well was quite overdone. SBI Life, they believe, has higher presence in mass market, and they believe that the stock is actually trading at a high and widened valuation discount to HDFC Life. So on the back of that, SBI Life has been given a buy rating by Citi. They've given a target price of 1,657 per share. And lastly, we will be watching out for Ashok Leyland. CLSA believes that higher realizations and easing cost pressures could drive a margin beat. In fact, they believe that the company is on track to achieve double-digit EBITDA margins, and the demand outlook specifically for MNHCVs is appearing to be quite strong. Price hikes are also expected to continue to recover any increase in cost. So given all those factors, CLSA has maintained a buy on Ashok Leyland, given a target price of 189 per share.
Okay, Vamakshi, thank you so much for that update on all the brokerages and what are they saying this morning. But we also have Ashesha with us in the studios. Ashesha, very good morning to you as well. And what are the stocks that you're keeping on your radar today? What is going to be moving in trade?
Hi, good morning. Earnings season is on in full swing. So Apollo Tyres will be the first one in focus. Remember, it reported its numbers post-market hours yesterday, where revenues came in at 6,423 odd crores. We saw an increase of about 12.5% as far as the revenues are concerned on a year-on-year basis. Margins, meanwhile, also saw an uptick of 120 basis points. Apollo Tyres reported margins at 14.2% this quarter versus 13% that the company had reported same time last year. Apart from this, Birlasoft will also be in focus in today's trading session. Company's revenues have largely increased marginally on a quarter-on-quarter basis. But as far as the bottom line is concerned, company has reported a net loss of about 16.3 crores versus a profit of 115 crores that the company had reported in the previous quarter. And this is because the company has made a one-time provision of 151 crores because one of their clients has filed for bankruptcy. So on account of that, bottom line for Birlasoft has been impacted this quarter. Likhita Infra will also be in focus. Company has informed the exchanges that they've received an order worth 130 crores. So on account of this order win, keep an eye out on Likhita Infra as well. Moving on to Wardwizard Innovations, then the company has informed the exchanges that they've sold around 31,800 units of electric two-wheelers in the first 10 months of the year from April to January 23, indicating a growth of nearly 149% on a year-on-year basis. In the month of January alone, they sold nearly 1,300 units of electric two-wheelers. Apart from this, Karnataka Bank will also be in focus again on the back of its numbers, where net interest income saw an uptick of nearly 34% on a year-on-year basis. Meanwhile, profit after tax more than doubled on a year-on-year basis. Company reported profit after tax of 301 crores versus a PAT of 147 crores that the company had reported same time last year.
Well, thank you for all those details, Ashesha. Now stay back, because there's some news that you need to break down for our audience. Well, the Rajasthan government has amended its combined excise policy for FY23 and FY24. Now, the state has hiked prices for Indian-made liquor and Rajasthan-made liquor. Now, how will this impact the alcohol stocks? So, Ashesha, you need to break that down for our audience.
Absolutely. Liquor stocks have been in focus for the last many trading sessions, and now Rajasthan government has gone ahead and tweaked its excise policy. The amended excise policy has increased the rate per case of Indian-made India liquor as well as Rajasthan-made liquor, amongst other changes that they've done in the excise policy. Earlier, excise policy did not provide for any hike in these two categories, but this time they've gone ahead and increased the prices by more than 2 times as compared to the price rise that we saw in FY22. Now, primarily this is because of the rise in raw material prices that we have seen in the last couple of quarters. So ENA, that is extra neutral alcohol, and packaging costs have gone up considerably, and that is the primary reason why Rajasthan government has gone ahead and increased the excise price on this particular liquor types. Now, this will have a positive impact on Globus Spirits. Incred Equities has come out with a note where they say that Globus Spirits has a country liquor market share of about 34% in the state of Rajasthan. RML and IMIL states sales in Rajasthan account for nearly 70% of the total consumer business of the company, which has the highest EBITDA margin and contribute nearly 35% of the revenue mix of the company. They also say that it could lead to profit after tax growth of about 5% in FY24 for Globus Securities. Incred, meanwhile, has reiterated its ad rating on the stock. They've kept their target price unchanged at about 3,192 rupees per share, and they are valuing the company at about 25 times FY24 EPS. So, amendment in the Rajasthan excise policy and consequent EBITDA margin expansion is why Globus Spirits will be in focus today.
Okay, Ashesha, thank you so much for that update there. Let's go across and actually listen into what Vallabh Bhansali had to say, especially coming in on some sectors. He said that financials will continue to be one of the preferred sectors. That's the word coming in from Enam Group's Vallabh Bhansali. Let's go across and listen in.
Financial sector will always be a favorite circle. So, whenever there are corrections in that sector, people will want to buy. Similarly, the whole consumption basket is going to be like that. If you asked me about balance sheet last year, I told you that, it is first time in several decades that we had all the three balance sheets in good shape: corporate, banks, and the government. The fourth balance sheet, which may be under some stress currently, is the personal balance sheets. And that's where the finance minister, listened very carefully and has given direct tax benefit. So suddenly, large number of people who were in tax bracket have gone out. It has a huge sentiment effect. If interest rates come down further, the EMI pressure comes down further, I think some of this stress, which may be there to some extent, will start correcting. One thing that we haven't seen is still the result of, crops. Some of the crops have done phenomenally. And, once that starts coming into this, so some of the stress that you may be seeing, one area where, real estate prices have gone up very high, and now you have some marginal change in real estate, taxation policy or, capital gains reinvestment policy. So maybe some of those cases, some pockets where real estate was very high may see some corrections. So बड़े-बड़े देश में, छोटी-छोटी बातें तो कुछ-कुछ होती रहेगी. So except for those three balance sheets remain intact. I think the kind of dividends that will come out of banks is going to be staggering. Both to the government and, private sector. So bank after bank, is not talking of, any significant credit cost. And we have seen the expansion of NIMs in many banks. So even if on a larger base, some of these things get corrected, still there will be very, very healthy profits. So with government spending all of this with a reduced fiscal deficit, that is the most important thing. Therefore, any shortfall that could arise from any of these balance sheet stresses, if at all, is not going to be there. The fiscal deficit, the borrowing number, the conservatism in the estimates, etc., all give us confidence that this will continue.
And well, Reliance Retail has become the first to deploy acceptance of e-rupee. The e-rupee acceptance has been facilitated by Kotak and ICICI Bank's platform provided by Innoviti Technologies, which has a 76% market share of digital payment processing at enterprise retail.
And Siddiqui Kappan has been released from the prison after 2 years of arrest. He was arrested while he was traveling to cover the alleged Hathras rape incident in Uttar Pradesh.
And Padma Shri awardee K. Vishwanath passes away at 92. Now, Vishwanath was popular for iconic films such as Sankabir Bharman, Sagara Sangaman, among others. Now, he breathed his last at his residence in Hyderabad. The 5-time National Award winner was suffering from age-related ailments.
Okay, and with that, we are absolutely out of time on this edition of Market Cafe. SGX Nifty indicating a positive start coming in for the Indian markets as of now, up 0.4% in trade. So don't go anywhere, the markets